Alrighty guys, if you're looking to do anything real estate based in 2026 and you're wondering, should I rent, should I buy, what are the interest rates, blah, 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 should I build wealth, should I get equity, all these other things, well, we're going to take a dive into that today. Not just your normal internet advice, not just your blogs, we're going to jump into some numbers so that you can really start to break it down. And of course, this goes for Cleveland, but if you're anywhere else too, anywhere in the States, this advice is going to help you as well. And you can always recreate it with the numbers and other things like that. But you always hear build wealth, build equity, but the truth is it's complicated. And for some of you guys, renting might make sense. For some of you guys, buying might make sense. So let's break it down. Let's hit some of those pros and cons, some of those numbers, and just decipher and really figure out what is the best bet for you. And then of course, deeper into this video, if you still can't really make that decision, or if you want to talk deeper about it, let's go ahead, let's jump on a call one-on-one and discuss your actual personal life, your personal goals, and see how I can help you come to that conclusion and that decision. All right, so stay tuned. Let me know what you're thinking. Let me know what you think about these numbers too. I mean, obviously everything is a little bit subjective, so if you guys have a different perspective, if you guys think about it differently, let me know. I'm always curious to hear what people think, just kind of your own little opinion on this. That's always something that I'd like to take, and it can always help me help others more when I'm doing real estate deals. So let's go, stay tuned, and let me know what you think. What's going on, guys? If you're new to the channel and you want to know all there is about living in Cleveland, Ohio, or just general real estate knowledge as a buyer or a seller, make sure to hit the subscribe button and hit the bell so that you can stay up to date on all things Cleveland and real estate, of course. My name is Kip with Living Cleveland, Ohio, powered by Mancuso Homes, eXp Realty, and we get calls from people just like yourself looking to move or sell in 9 or 90 days, and whatever that is, we are here to help, to make sure that you have a smooth transaction and to make sure that all of that pressure turns into a smooth, happy, and enjoyable experience in the real estate world. If you need anything real estate based, make sure to reach out, give me a text, a call, let's meet person, Zoom, face-to-face, whatever it may be. I'd be happy to help you guys in your journey. And of course, make sure to go ahead, do a friendly stalk on my social media, KipSweeney_RE, if you want to get to know me a little bit better. There's some other stuff there, other content, and some personal stuff as well. It's an open public profile, so go at it. I don't mind. But nonetheless, stay tuned. I hope you enjoyed the video. Thanks for coming to my channel, and let's jump into it. Alrighty, so why isn't renting versus buying just a simple answer, simple question? And it's because a lot of other things go into making up whether this is a good time or not for you. It's more than just the monthly payment. You really have to break down your lifestyle, the numbers, what to look for, and what to expect, right? So, for example, you always hear about building equity, building ownership in a house. Well, how long are you gonna stay in that house? And depending on where you're living, there's a certain amount of time that requires to be in that house to really benefit from homeownership. So there's a lot of things that go into this. However, on the flip side, renting can cost a lot more than you might think. So obviously there's perks to both, and it's about determining what's the right fit for you. And so that's what we're gonna do in this video. But we're gonna make sure that it goes, we break it down, we see, how can you ask yourself these questions to ensure that you make the right decision. All right, so first and foremost, we're gonna start with the national data. So nationally, according to articles, so I'm gonna pull this, I'm gonna read off of it so that I don't mess this up. But according to a recent report by the real estate analytics firm ATTOM, owning is actually more affordable than renting in about 57% of US counties. So especially in the Midwest, where obviously Cleveland is located, but especially in the Midwest over here, we obviously are gonna be a little bit better when it comes to owning a home than it is renting. And we're going to talk about this a little bit later. Let's keep it on the national side of things. But what we're saying is that it doesn't always mean that owning is going to be cheaper everywhere, but there's a lot of big considerations. So in a coastal market, for example, buying can cost a lot more than renting, right? So maybe it is worthwhile to rent when you're over there, or to check those prices out, because half the time you've got obviously the purchase of that home, which on the coast is going to be a lot more expensive, and then the insurance that's going to come with that is just going to be crazy compared to what the rent might be. But on the flip side, renting can be a lot cheaper in the short term, but you just don't build that equity. And again, depends on how long you're going to stay. So things to think about, and depending on where you are, location is very, very important. So to that point, I'm very curious, and I'm going to ask you again probably throughout this video, But tell me in the comments below, where are you located and what is it like to buy versus rent in your area? I'm always interested. Obviously, I know the Cleveland market, but curious about who's watching this and what it's like for you guys as well. All right, so let's jump into more of like what numbers we need to look at. So understanding some more of that math side of things. So when comparing buying versus renting, we need to look at quite a bit of things, 7 things. So monthly housing costs, upfront costs, maintenance and repairs, property taxes, insurance, opportunity cost of money, equity growth if you stay long enough. So monthly housing costs, what is it gonna look like? What are your utilities? What do you like to spend? What is your normal monthly cost just living in general? Your housing costs to live the lifestyle you want, to live the way you normally do. What does that look like? Because we need to build those numbers into this. Upfront costs. So, when it comes to closing on a property, it's a lot more expensive than it is to renting, right? When you rent, typically it's gonna be like a first month or last month and a security deposit, which still can be a lot depending on what you're renting. But when it comes to buying, you have closing costs, you might have buyer agent commission, you have closing costs, down payment. That's the one I was looking for. That's a big one, especially if you're putting down 20%. I mean, even if you're putting 3% down, it still can add up to quite a bit of money. So something to think about. Maintenance and repairs. If you're renting, you're not someone that has to worry about that. Sure, you have to take some time to get things scheduled, to work with the landlord, to get people there so that they can get out and do the work, but you're not paying for it most of the time. But as a homeowner, you're gonna have to pay for these things, and a lot of this stuff might come without knowledge. You might buy and be super excited, but start some repairs and start to do some things to the house, and all of a sudden you unfold all of these things that you need to do. And now, okay, unplanned for costs that are gonna add in. Property taxes, very important to know. I know here in Cleveland especially, it changes. So you might have an area where if you're spending $500,000, you can purchase, but there might be another area here in the suburbs where if you're spending $500,000, you might not be very comfortable with that monthly mortgage because of property taxes. So understanding what the areas are, what the taxes are like, is critical. And you can actually do the math. You can see what it might look like for your next year for property taxes with a lot of different sites here. So I can definitely point you in the right direction if that's something you want to do. Insurance is insurance, right? But it's going to be a lot more costly. And again, here in Ohio, we don't have a ton of natural disasters. We really don't have any. So it's not going to be like anything crazy. So homeownership is a little bit better. Insurance isn't as big of a component for you. But if you're on the coast or if you're on the water or somewhere else that you absolutely need that insurance, it's going to add up. That's going to be pretty costly. So if you're not here in Ohio, if you're not looking here and you're somewhere else, you have to keep that in consideration. Opportunity cost of money. What is the opportunity cost of buying right now versus renting right now? If you rent right now, are you gonna have a new job? Are you gonna have a raise in a year? Are you gonna come into some money in the next year or two? Things like that. Are you gonna be able to save up for a nice down payment? But along with that, if you're gonna buy right now, is this house gonna be long term? Is it something that you're able to afford? Are you gonna be moving out of it soon? Or is it gonna be a short-term home that you own? All this stuff that you have to consider, because let's say you are, expecting a raise. Let's say you are expecting to bring in some money, or you're only somewhere temporarily. There's no reason to purchase at that time, because if you're gonna get some money, if you're gonna get a raise, might as well go ahead and get that more money, get that bigger house, or be in a better spot to afford that house, because you don't want to be house poor. But not only that, I mean, we all know it. Everyone, you don't have to, you have to be living on a rock to not realize the cost of living right now, and the cost to be on a rock to live. Oh gosh, English is not happening right now. You have to be under a rock to not realize that houses are a lot more expensive with an interest rate that's a little higher right now. So it's not like people in the past where it's like, oh, this is my first home, this is gonna be my, my starter home, blah, blah, blah. That doesn't happen the same anymore. It's a lot more difficult to do that in my eyes, and in what I'm experiencing here in Cleveland, Ohio with like buyers and stuff. Typically, a lot of people are usually either getting a house that they're like, okay, we can grow into, and we can have a kid, we can have 2 kids here, and then late down the line, maybe we do move out and we do get a new place. But for the most part, they're always thinking ahead. You have to kind of think for that future a little bit. If it's just you and you're like, oh, a 2-1 is gonna be okay, even though you already have a kid and one's on the way, that's not gonna work, even if it is a starter home. So it's all about the opportunity of what that house is gonna do for you right now and what that's gonna look like. But homeownership might be great for you right now because you're in a fantastic spot. Maybe you have a W-2, maybe you got a great job, but in your future, things might change. In the future, like, hey, I'm thinking about creating my own business and starting some things and quitting my job. Well, if you do that, it's going to be a lot more difficult to get a loan in the future, depending on how that job's doing, how that business is doing, and so on. So again, understanding where you're at now, what your future looks like, and what that future can affect is critical. And 7, equity growth if you stay long enough. So, I mean, this is obvious, like, So, I mean, that's just part of it, but common knowledge, right? So you build that equity if you stay long enough, and we're going to get into it a little later, but on average, it's, 7 to 9 years of staying there that you'd really want to see be your time frame to really start building that equity and seeing that. In Cleveland, Ohio, it's going to be a little sooner than that, or like on that shorter end, just because of the numbers here in comparison to each other. But go ahead, it's critical that you use online calculators from NerdWallet, from Realtor.com, and just see what it's like. Just compare these numbers, compare it, and see what it's like for you and your current status. But the calculators are going to include quite a bit of things, and I'm just going to read them off here so you have it. But they're going to include your mortgage payment, your property taxes, your homeowner insurance, your renter's insurance, and maintenance and repair costs. So all this stuff, again, is stuff that you need to take into consideration, things that you need to think about. Obviously you want these numbers to be in there so you can see it. You want to plan for the worst and, hope for the best, right? In case, that worst does happen, it is what it is, then you want to make sure you're ready for the next step. You want to make sure you're ready in case, you do have the bad end of the stick when it comes to these numbers. All right, so let's talk about numbers a little bit. Price to rent ratio. So this is going to be a tool that you can use just in general. It's just a metric. It's not something that you can just like live and die by because it wouldn't be smart. It's numbers. But if you're a number person, it's going to help you make sense. So if we just take the purchase of a home, if you take the amount that you want to purchase, let's say it's a $500,000. So the purchase price of the house is $500,000. And let's just say the rent, you go to Zillow, you find some comparables, you find what maybe that house would rent for in that area. Let's just say it's $3,500. Well, you're going to take $3,500. You're going to take that monthly rent. You're going to find the annual amount. So in this case, $3,500 times 12 is $42,000. You're going to take the purchase price, divide it by the annual rent. So $500,000 divided by $42,000, and you're going to find what that number gives you. So I just want to see if my camera's intelligent enough to, I don't know how it is. Anyway, it's 11.9. So essentially what this means is that your ratio is under 15. So in this case, buying may be favorable. So in this case where your ratio is under 15, buying is more favorable. But if we were to take a different ratio, I'm not going to bore you and figure out numbers, but if we were to take a different number, and let's just say it was $500,000 and the rent became $2,500 somehow. $2,500 times 12, $30,000. Let's just say that you somehow got away with that. You got a great deal, and it's 16.7. All right. So this ratio is between 15 and 20. You're at 16.7. It's neutral. You favor further down to the 15 mark. So if this is a house that you really like, if it's something that is perfect for you, then sure, buying could be a great option. But if this is, you're okay, I'm not gonna do that. If you're teetering on like, I don't like this, I don't like that, then maybe it's not the right fit for you. You can find a good rental as well. So just keep that in mind. And then finally, if the ratio is over 20, let's just say you got an insane deal and you're only spending $12,000, $12,000 a month on that annual, like it's $1,000, but nonetheless, whatever that might be, if that ratio is over 20 when you do purchase price divided by the annual rent, then in that case, renting would be the better financial decision. Again, these are metrics, but you still have to make the end decision. So the ratio is under 15, buying is going to be a little bit better. If it's between 15 and 20, you're going to find that it's a little bit neutral. So it can go either way, depending on your taste, how it fits you and your personal lifestyle at that moment. And then finally, if the ratio is over 20, then renting would be a little bit more favorable. Again, this isn't to live by and die by, but it's something to help you just realize, okay, is this going to be good? Should we even consider it? Or is renting going to be the better option when it comes to saving money or it comes to spending? Okay, so food to think about, or food for thought, whatever you want to call it. All right, so let's kind of look at it from the standpoint of Cleveland now. Sorry for anyone that's watching it that doesn't care about Cleveland, but I gotta still give them some information because they're here. But so coming to a little bit of data, as of 2025, the late 2025, data shows that median rent in Cleveland proper is about $1,240 to $1,380 per month, and that depends on the size and the neighborhood, unit size and the neighborhood. And of course, so when we say unit size, it's going to be rooms. Is it a 2-1, 3-1, 3-2, 4-1, blah, 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 right? Median home price in Cleveland is around $230,000 to $242,000. So depending on, again, where you're at. The metrics. So historically, Cleveland has always been below the national average when it comes to purchasing a home. We've always been on the lower end, which has been great for buyers. But conversely, we are pretty high on the rent side. We're pretty close to the national average when it comes to rent. And I'm sure, depending on when you guys are watching this, you've seen that. I lived in Charlotte and I saw the growth of their rent. I saw what their rent prices were like. I mean, their home prices were crazy too, but rent was pretty insane as well. And I saw that coming here. I saw apartments, I saw people talking about how crazy rent's getting here, blah, blah, blah. And it's just, we were catching up in rent faster than we were with the prices of homes, right? So essentially, what this means is that, hey, depending on where you're at, you can figure out what's gonna be the better fit for you. So continuing on, we have those two numbers. Again, according to local analysis, the income needed to buy a typical Cleveland home, so about $230,000, right, on the low end, is around $66,700 per year. However, the income needed to rent is about $55,200 per year. So it makes buying only 20% more expensive rather than renting based on income. But this can mean a lot of different things. Again, when we come, and first of all, obviously that gap is a lot more narrow in Cleveland than it is probably a lot of other places, but for you personally, think about where you're at. For someone that has these incomes, right? For someone, it could be a great fit because maybe they're a single person, they don't have to take care of anyone, maybe they've been saving up and they live in a pretty frugal lifestyle, and they've been able to get to where they need to put a pretty good down payment and be comfortable with a monthly mortgage. On the other side of things, maybe it's someone who has some kids or someone that has to take care of family, someone that has more bills and expenses because of other things. Who knows what those things can be, but let's just say they are there, then maybe you didn't have the opportunity to save as much. So maybe renting is going to be a good fit for you right now so that you can save, maybe some of those things are over. You've paid off maybe a car loan or student loans or something like that, and you can save that money now, and you can use that later down after a year to put into a down payment, to put into, something toward a house, right? So depending on your situation where you're at, it really depends on obviously lifestyle and who, where everyone is in their current life. So it's always going to be different. All right, so of course, along with all this, rent is increasing. I was just telling you about how Charlotte was crazy. I've seen rent starting to increase here. You guys are probably seeing it too, but rent isn't static. Unlike a fixed loan for a house, it is going to be a little bit more static, so you can expect it, right? So maybe you're living in a place that you're spending $2,000 a month for rent, but next year it's going to be $2,100 a month. All right, so it can change. That $100, when I've added up over the whole year, can help you in the long run. All right, so it's something to think about. And in Cleveland, again, we're kind of talking about prop more so than not, because on the outskirts it's completely different on the suburbs, but rents are rising year over year at about a 2.2% pace. So that's what we're seeing currently. It can change, it could definitely differ, but you're seeing that money go up. You're seeing the rent go up. It's a surefire thing to happen. But what this means is that when someone can buy, it's a little bit more attractive to purchase a home and not have to deal with that than to rent. However, once again, renting is much more easy. Well, renting is a lot easier for someone to not have to stay in one place. If you don't know where you're gonna be, renting is gonna be very easy. If you're someone that likes to move, renting is gonna be so much easier for you. If you're someone that just, maybe you just aren't prepared to purchase, to take on all that comes with a home purchase, renting can still be easier for you. And if you're cool with it, you can explore and move into different areas and really kind of help you decide where is that forever home or that home that you want to purchase going to be. I guess it could be a good way for you to experience different parts of town, right? So again, different things for different people, but you have to be thinking about this stuff for your individual lifestyle. I can't tell, obviously, what to do exactly to make this decision, but I can give you the clues and the context and direct you in the right direction. All right, so we know that rent is rising, but on the flip side, upfront costs of a purchase are very, very high. So you have down payment, you have closing costs, you have an inspection fee, appraisal fee, and of course, title and recording costs. Now, that's a typical transaction, but each person, once again, is different, so I'm gonna give you some insight into how this can change. Down payment, for the most part, is it's always gonna be there, but unless you're a veteran and you can get a VA and get 0%, but depending on who you are, what you're putting down, you might be putting down 20% because you don't want PMI. You might be able to put down 3% and be cool with PMI for a little bit of time. It's totally up to you. There's ways around that, right? Then closing costs. These can differ. For some people, expect 2 to 5% when you're buying of the purchase price, but closing costs can differ because there's ways to get money back, to get money from the seller to help with your closing costs. So like I said, I don't know what video I've said it, but I had a friend who we got her $150 back at the end of it for basically getting money back from the seller. She was in healthcare, so she had some down payment assistance. She was only putting down 3%. So with all of this, she was able to actually get $150 back. So, I mean, it's, 100, 150. It's not anything crazy, but she was able to get some. Now, she did pay some stuff through the transaction, right? So like she did have some money that she had to take care of. It wasn't just, easy peasy. A lot of negotiating, going back and forth with the seller to get that money. back in concessions and so on. So, and then along with the down payment assistance, it helped tremendously so that she didn't have to worry about a lot of this stuff because she didn't have a lot of cash, right? So we were able to use where she's at to strategize how we went about finding her house. Now, inspection fees. This is going to be pretty common. I mean, it's about $450 on average here in Cleveland. This is also going to be something that if you're comfortable, you could waive. I wouldn't advise it. It's also something that if you have a pretty new home, then you can feel a little bit more comfortable waiving it. Again, it's up to you, but you can cut costs there. Appraisal fees. Again, if you're someone that's putting a lot of money down, if you have great credit, you can sometimes get this waived by the lender. But again, it's requiring usually a bigger down payment. So unless obviously you already have the money to do so. So for the most part, an appraisal fee to waive that is going to be a little bit more difficult, but it's not undoable. But title and recording costs, that one is going to be, you're pretty much not going to change that. That is going to be something that you're going to have to handle and deal with. So with all of these in mind, these are all different things that you have to consider. And again, in your normal transaction, you're going to be handling all of these, but they're the upfront costs that can either say, hey, I'm good to go, or hey, I don't want to go. So speaking with a lender ahead of time is going to be very important. But along with that, obviously, when you're making your mortgage payment each month, a portion of that includes a portion of principal. So in the long run, you are building equity in your house as you continue to pay, whereas renting obviously wouldn't. So yeah, sure. Your family, friends, whoever says this stuff to you, they're right in that sense. But again, how long do you have to be there to make sure that it starts to pay off in true equity, in a true way, right? All right, so we're gonna converge two into this one. So again, I've talked about how long you have to plan to stay. That really matters because again, it's about that 7 to 9 year range to really see the financial benefits of buying outweigh renting. But again, depending on where you are, depending on where you live, depending on what it is in your area, your city, or where you're looking, it could be completely different. You know, again, in Cleveland, because our number's a little closer, it's a little bit on the near end. It's a little bit toward that 7-year end rather than somewhere else. Maybe New York or LA could be further toward that 9+ years before you reap those benefits. So again, wherever you're moving, wherever you're looking, take that into consideration when you start thinking. Okay, but again, lifestyle and flexibility are critical here because renting is going to offer flexibility. Renting is going to offer you to move. It's going to offer you to just not have to worry about maintenance, but it's also going to make it very easy to do the things that you want without having to worry about just to live day to day without having to worry about something surprising you or coming up. Now, what it doesn't allow you to do is really customize your house, paint the walls. In some leases, hang a lot of things. You know, maybe have pets, smoke if you're a smoker. Your lifestyle might not fit a rental. Now, I'm not, as long as you're not in one of mine, I'm not gonna be a stickler, but if you really, if you're gonna rent and you wanna paint a wall. Just be able to paint that wall back, and be good at it, okay? Don't make it bad, because then it is pretty obvious. But if you want to do so, do it. However, buying is going to build you that equity in the long run. It's going to have a stable cost for you per month as long as you have a fixed rate, whereas renting is going to increase over time. And then of course, in buying, you have a lot more customization that you can handle, that you can take care of with your house. You can do a lot of different things with the house, however it fits you, okay? And then of course, there's property tax, potential tax benefits when you stay there long enough, homestead, all this other stuff. So there's some things that you can benefit from with the tax side of things as well. So things to think about once again, but your flexibility is going to be a critical part here. Knowing what your future holds is going to be critical. Understanding if, am I going to be moving in 2 years, 3 years, 4 years? Hey, am I a single person that's still trying to find a partner and a spouse and want children? Is this house going to be big enough for that? Is it going to be a good spot for it? Does it have what we need to do to raise a family? Does it make sense to buy or to wait until I get married? All this stuff. Think it through. Obviously, I'm happy to help you as well, but it's going to be really dependent on your own lifestyle, future, and where you're at currently and what you want in the future, of course. I mean, that's just how it's going to be. So what's the final answer? Well, I can't give you one without really knowing you, right? But what I can do is help and guide you a little bit. So it really depends. If you're someone that's already ready to hunker down, to stay stable with a monthly fixed payment, you can put some upfront cost into purchasing a home. You really want to make the home your own. You want to customize it. You want to update it, take care of it. You want to do your own things. And you plan on living there for quite some time, as well as that house itself fitting your lifestyle, your personality, what you like to do. I say this by does it have a theater room? Does it have a basement? Is it a ranch? Is it 2 floors? So obviously the criteria that would come into when searching for a house, making sure that it is exactly what you want. If it fits all those things, great. Go ahead and purchase. because sure, then you're going to build equity over time. But if you're someone that maybe doesn't know what the future holds, maybe you're getting a raise in the future, you're getting a better job in the future, maybe you expect to have children or a bigger family in the future, or you don't know if you're going to stay there long term. You don't know if you like the area. You don't know if you're going to move states or cities, or maybe if you are getting a new job, maybe that ends up relocating you, all these different things, then sure, maybe renting is the better option. Or if you don't have the cash, right? So you don't have to be upfront with the payment, or if you don't want to handle the maintenance. If you're someone, say a sales job that does a lot of moving, it might be hard to purchase right away. You might need to have a significant other that can be at the house to ensure that everything's okay, because you can't take care of some of those things when you're away traveling all the time. So it could be better to rent. So things to consider, right? But if you're ready to go, ready to hunker down, have the cash, perfect. If you're someone that wants that flexibility, if you're someone that doesn't know what the future holds, and you don't know where you're going to be personally and what life looks like, maybe it's better to rent right now, save that money, and then get the house that you want, that you know fits your lifestyle when you have the answer to that question long term, right? So in the end, I hope this video helps you. I hope you're able to take some pieces away from it and apply it to your own life. But if you still have questions, if you're like, hey, I still don't know what to do, or hey, I need to know some numbers about these neighborhoods, I'm happy to help you. Just shoot me a text, give me a call, DM me on Instagram. I don't care. Whatever you want to do, I'm happy to help you. Or if you're in a different state and you need some guidance, just let me know and I can connect you with a top agent in your area to make sure that you're taken care of as well. But nonetheless, I really hope you enjoyed the video. I hope this was helpful. That's my end goal every single time. And let me know what you want to know in the comments next. And again, I'm curious to hear, what is renting versus purchasing like in your area? Just let me know. Very curious. See you guys next time in the next video. But for now, au revoir. I don't know. I'm not sure. I'm gonna have to figure out how to end these videos a little better, but see ya.